Global business consulting firm Bain Company is beefing up management at its South African operations to help clients maximize the value of their businesses. Today's news is that 2 new appointments have been made. Vittorio Massoni has been appointed Bain's country lead in South Africa, while Athol Williams has returned as a partner in Bain's global financial services practice based here in Johannesburg. Athol joins us now in studio along with Hugh MacArthur, partner and head of the global private equity practice. Good afternoon, gents. Thanks for coming in.
Good afternoon, Stephen.
Companies have come through a very difficult period, as we all know. Earnings under pressure, M&A activity under pressure, private equity too. Hugh, are we in recovery mode now? What evidence are you seeing?
I think we are globally in recovery mode, Stephen. We've seen the first green shoots of recovery in the fourth quarter of 2009, a slight opening in many markets of the IPO window for a few, I wouldn't call them exits, but at least listings and perhaps a pathway to exit. We're also seeing new deals start to get done in many markets, not just the developed economies, but also in the emerging markets, India, China, Southeast Asia. People are looking at deals again. Debt availability certainly isn't robust, but there's enough debt that things are able to get executed.
Athol, what are you seeing on the ground here in South Africa?
A similar story, Stephen. We certainly haven't been immune to the global downturn. Although so we see fundraising down, we see number of deals being done, numbers down. But what we are seeing is BEE deals buoying the market. And so last year, for example, 2/3 of private equity deals were BEE deals. And we certainly see that continuing going, because as existing BEE funds exit, a lot of the requirements for those BEE deals means they must actually exit to another BEE private equity fund. And so certainly it's been buoying the South African PE market through these BEE deals.
Hugh, what damage has the recession of last year done to the exit strategies of private equity partners?
Well, it's done a tremendous amount of damage, Stephen. Part of the problem is that in the deal-making frenzy that we saw globally in 2006 and 2007, most of the investments that are sitting in many private equity investor portfolios are relatively new, and they were bought at the highest possible multiples or the highest possible prices. Those very pricey assets now need to be exited at some point in the future, but it's relatively unlikely that we're going to see those kinds of multiples upon exit. So private equity investors really need to focus on building the operating value of their businesses. It's really the only controllable lever in their toolkit that will reliably help them make money in the future. So it's really roll up your sleeves and get to work with management teams time.
Athol, when you talk about BEE deals helping to support the market here in South Africa, on what level are we seeing these deals? Of course, we saw all the large companies, the listed companies, doing those deals a number of years ago. Is it still listed companies? Are we seeing private companies also looking for these BEE deals?
Far more on the private companies, absolutely. I think a lot of the big deals have been done, and it's just an evolution of the market that now we're seeing the effect rippling down into the market, trickling down into the market of private companies now seeing the imperative to have a BEE partner. I think also as a lot of mid-sector businesses who are benefiting from the demographic changes in the market or benefiting from the big infrastructure spend in the market are seeing the need both for capital to grow their businesses but also the need for BEE.
How do you structure a private equity deal around BEE and still get maximum value for other shareholders in that business?
I think, Stephen, the best way to do it, and what's happening increasingly now, is we're finding black empowered private equity funds emerging. And so whereas probably 10 years ago, it was a lot more complex, and so the deals were far more complicated and onerous. I think now you're finding black empowered private equity firms being established. And so the investment they make in a business is in 100% black owned in that respect. So a lot simpler, those deals. I think the black empowerment funds now have also matured, and so they bring some real value add to those investments they make, as opposed to in the past where I think it was largely, we'll do the deal and kind of sit back.
Hugh, and perhaps back to the reason why you've both come in today, why are you beefing up the South African operations? What are you seeing in South Africa?
Well, we're seeing a tremendous amount of opportunity in South Africa. Some of the hot sectors that we see globally, but also are applicable here for investment by private equity investors, include energy and healthcare. And this is a region of the world where demand for both is growing dramatically. And we want to ensure that we are appropriately resourced as a consultancy at Bain to work with the best private equity investors and work with their companies to create the most value in those and also in other sectors. But we foresee a robust recovery of the private equity market in South Africa, and indeed a long growth story that's here to be told. And so we're excited to be here in the market.
Of course, you mentioned energy and healthcare, and of course we have this whole Eskom debacle that's played out over the past few months. We also know that the government's looking for a healthcare fund for all citizens. Do you think there's opportunities there for the private sector?
I think there are always opportunities for the private sector in areas like healthcare and energy. I think more broadly, if you look across emerging markets, these are sectors that the global private equity industry has been addressing over time. Healthcare is about 17% of global GDP. Energy is a relatively similar number. These are too big a set of enterprises for there not to be a role for private capital to play. And I think the role differs market by market and situation by situation, but undoubtedly in South Africa there'll be a healthy role for private equity investment in solving those issues.
Just to add to that, Stephen, in terms of on the energy side, I think the legislation has now been put in place for IPPs in the power generation, and so I think we're definitely going to see Eskom cannot build its full requirement, and so we will be seeing private investors coming into the energy generation and possibly further down the value chain as well.
Is it attractive to them though?
It's difficult for them right now, and so I agree. I think a lot of the economics, a lot of the legislative process needs to be further clarified. For example, who would be the single buyer of the power they produce? At what prices will the power be purchased? So I think some things still need to be clarified and cleared up. But I think no one's denying that we need some private investment in generation in South Africa.
Of course, your focus is on the financial services sector. What are you seeing with our financial services companies? Are they performing up to their potential, or is there work to be done there?
I often look at our financial services sector and describe it as a sector with an identity crisis. I think if you look at banks are playing more and more in insurance space, insurance is playing more and more in the space of banks, and in many ways, as they try to think about their growth, they are battling to find growth avenues. One of the areas Bain has developed a lot of tools and thinking around is the idea of focusing on your core business. And so I see a lot of the financial services companies straying quite far from their core business in terms of the product areas where they've got expertise or the segments into which they're going. And I think for that reason, a lot of them are underperforming or not performing to what their full potential would be. I think what we'll see in the next few years, Stephen, is I think a change in the structure of the industry. It's no surprise the top 4 banks all have new CEOs actually. If you look at it, the last few months, a lot of the financial services companies have got new leadership. I think the market the structure is going to change substantially, because if you look at where the big growth is, low end of the market, most of the big banks are struggling to move down there. Something might happen there around consolidation possibly, and the high end, massive proliferation of different smaller players. So I think in the industry, a lot of the big players have been struggling to really find their space. And certainly our advice to them, typically when we work with them, is to try and find the space in your business where you're really, really good at. Invest in the core until you've maxed out your value in your core, then begin to think of broadening along the value chain.
Of course, our financial services sector came out of the global crisis relatively unscathed, sitting quite pretty at the moment. Why mess with it?
The financial services sector where, Steve?
South Africa.
South Africa. I'm personally not an expert in the South African financial services industry, but I think there are many places in the world that came out a lot stronger than OECD nations, and I think that there are some lessons to be learned on all sides about regulation and the way to properly grow financial services businesses and markets, and what mistakes we won't make the next time around.
Hugh, when do you think the private equity business worldwide is going to get back to where it was a few years ago?
I think it'll be a very long time before it gets back to the peak, or I'd call it even a bubble period of 2006, 2007. I think the mega deals are gone, and we're not going to see 10, 20, $30 billion and greater total enterprise values anytime soon. I do think that there will be deals done up to $5 or $6 billion in total enterprise value, and really the growth in the business is limited by tremendous freeze still in the credit markets. We are seeing it loosen a little bit, but it's nowhere close to where it was 2 or 3 years ago, and it won't be for many, many years. And another limiting factor, I'd say, is relatively anemic GDP growth that's forecast in many markets will also limit the ability to grow earnings and revenues in a way that will be attractive to private equity. So it is coming back, but the constituent pieces really have to come together in a way that structurally is going to be very challenging over the next year or two. It's a very, very fragile recovery at this point.